Hello, it's Thursday, the 19th of February, 2009. Brian Shannon from alphatrends.net here in Times Square. So we've got the market finished with another loss again today. The Nasdaq was down 45 cents or 1.54%, and it continues to worsen here as it just seems as though we're not getting that real knockout punch that I had spoken about last Sunday. The Nasdaq continues to be approaching the bottom of the range that it's seen, basically 31.5 down to 28, and we're getting closer towards the bottom end of that again. Volume is still just running about average, so no real panic. Tomorrow we have options expiration. This morning we saw the market gap higher and continue higher for just a little bit of time, and now we'll switch to a 1-minute time frame. You can see that the market did make a lower high and then a lower low in here, and then basically was trapped under the declining VWAP all day long as sellers continue to just put steady pressure on this market. We've seen a closing, a low what I meant to say was we've closed right near the low for the day. For the year, we're still off the lows that we had seen in mid-January, but it seems as though at least a test of this 28 level is inevitable. If we take a look next at the Russell, the IWM in this one, continues to be very vulnerable to, I think, a bigger panic, but we're just not seeing it. We continue to be, that is, below this support here at 43. So that area is going to be now, continue to be an area of important resistance for this market. We got down to almost this little low in here. Below that, it seems as though we ought to just see a complete collapse. Today's volume was lighter, and some people will try and convince you that that was a bullish or something positive, but obviously when you lose 1.4%, it doesn't matter if you did it on heavy volume or light volume, and when you're in a bear market, just a simple absence of demand will allow prices to fall very easily with just a little bit of new selling coming into the market. So on the 30-minute time frame, this level here, about 43.5, or I'm sorry, about 43, continues to be an area where sellers are showing up. We had seen that support break. Now it's acting as resistance, and we closed right near the lows in here. This market also gapped higher, and we saw that it basically got under that VWAP, tried to recover a couple times in here, but also closing right near the lows of the day with this little steady pattern of lower highs and lower lows. And I'm on a laptop. If you hear that noise, that's my this little mouse here, this mouse pad. I hate these things on these laptops, but anyways, we continue to see steady pressure. We haven't seen that knockout punch yet. This market continues to really follow. I think it seems to be following the IYR, the real estate, which is starting to see a pickup, a real acceleration in the selling in the IYR. The real estate was down 3.8% today on the 10-minute time frame. You can see same thing here. We'd gotten up to this level, and actually what I wanted to point out earlier on the Qs was that the Nasdaq this morning gapped up, was unable once again to get back up towards that 2960 level, and as I said yesterday, that level takes on added significance that it's now where we find the declining 5-day moving average. So that 2960 is a very important level. It's acting as resistance here, and this is where I think you're going to start to see the selling pick up. Back to that real estate index, though, we've got this thing on the lows, and the SRS continues to explode higher. The interesting thing is, again, that if you look at these inverse funds where this SRS was back in November, had you bought and held the double inverse, basically you would have lost a lot of money, and that's because of the way that the math works. So be sure to read those prospectuses if you get involved in those double funds. Let's take a look at the semiconductors. They lost 81 cents. They are back down to right to the bottom of the recent range, and that's not a good sign for the NASDAQ, as the semiconductors often lead the NASDAQ itself. On the 5-minute time frame, just a nice steady pattern of lower highs and lower lows, with prior support acting as resistance on the rally attempts. We're down near the bottom of this range where we have the potential for support. It isn't support until it's tested and bounced. Now it's a level where potentially we may find some support, but nothing here to suggest that it will become support. So let's take a look at the financials. Down again, down to $7.55. Obviously, multi-year lows in here. If we look at the 10-minute time frame, this market gapped higher as well. Sellers got on it and stayed on it for basically all day in here. Looking at a 1-minute time frame, also closing right near the lows. Never able to get back up above this declining VWAP, and when it's unable to get above the daily VWAP, basically it means that the sellers maintain steady pressure on this market all day long. And where the bottom is anyone's guess. But speaking of bottoms, oil short term, for one day. Now we have some people that can claim that they've made money in the USO and are still holding it. We did see a bounce of 6.2% in the USO and some little bit heavier volume. Obviously, the market remains heavily damaged in here, and this 27.5 level is going to continue to be an important level where we have the potential for resistance if we can get up to there. It's still a nice trade away to that level, but you can see that as impressive as that rally was, the market gapped higher, sold off hard and closed that gap, and then rallied right up to the declining 5-day moving average. So nothing to be excited about in there. Gold underwent a little bit of profit taking. It hasn't damaged this uptrend, but gold is a little extended. I wouldn't be surprised to see a test of the area where it broke out at 92. So that's something to keep in mind if you're trading gold, that is. And finally, let's take a look at the SPY. The spiders lost 85 cents or 1.08%. This market also seems to be very heavy in here and acting like the Dow Jones real estate index, and that it just looks inevitable that we're going to come down and test this. The bear market remains intact. Obviously, low volume again, nothing bullish about it because the S&P lost 1% today, and if you're involved on the long side, you're on the wrong side as this 80.5 continues to be an important short-term level of resistance. Tomorrow the 5-day moving average is going to come down and meet that as well. Also, this level may act as a little bit of resistance at 78.30. Tomorrow we do have options expiration day, so be careful. A lot of times you can see a lot of extra volatility due to that. The triple witching, I believe, is tomorrow, triple witching. Anyway, I won't be trading, but just trade wisely and manage risk.